Faultlines.
Welcome back to Faultlines on Radio Sputnik. My name is Jamal Thomas. I'm joined by my co-host Shane Stranahan, coming to you live out of our station in Washington, D.C. If you guys live in the area, you can catch us on radio at 105.5 FM and 1390 AM. We're also in Kansas City at 102.9 FM and 104.7 FM. If you guys are digging what Shane and I are putting down, whatever platform you're consuming this content on, give us a like and share that audio or video. If you want to join in on the conversation, you can do so with a chat, a tweet, and of course, you can reach us by phone at 202-521-1320. That is 202-521-1320. Your engagement helps make this show what it is, so definitely don't be shy. 82 years old, Bernie Madoff. He has left this mortal coil. Now, Bernie Madoff was caught basically, or was pleaded guilty in 2009 to a multi-billion-dollar Ponzi scheme that began back in the 1970s and defrauded as many as 37,000 people in 136 different countries. Not only did Bernie Madoff cheat all of these people out of money, he collectively cheated us out of, by my estimates, 130 years of a prison term of him serving his time. Bernie Madoff died yesterday. He was supposed to serve 150 years in prison. That would have made him the longest prisoner if he served that time. He did not serve that time. He was never going to serve that time, but he died in prison at the age of 82. Bernie Madoff is a very big name, and he is one of those names, like some people would say Hitler in the financial sense, for the number of people that he cheated, the amount of money to the tune of billions that were defrauded from the various people in the United States. To have a conversation about this, we're joined with Steve Grumbine. Grumbine is a political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action, a 501c3 and 501c4, respectively dedicated to education and advocacy for modern monetary theory. Steve, welcome to the show, man. Thank you for joining us.
Hey, bud. Thank you guys so much for having me on.
Absolutely. 82 years old, Bernie Madoff is gone. Like I said, he was supposed to spend 150 years in prison, something that was never going to happen. And this was basically for perpetuating the longest Ponzi scheme, or the largest Ponzi scheme in U.S. history. And again, just to make this point clear, 37,000 people in 136 countries were defrauded. This includes victims like Steven Spielberg, New York Mets owner Fred Wilpon, Kevin Bacon. Everybody is apparently like 5 degrees away from Kevin Bacon. Well, apparently Madoff was 1 degree away, and that was in his wallet. This was extreme. I mean, Madoff was one of those people. I don't know if you've watched the movie, but in the movie, you've had regulators would go and sit and talk to Madoff, and Madoff would basically say, do you know who I am? I helped write these regulations. And they would say, okay, and they'd leave. And there were cases where he could have been caught. He should have been caught dead to rights a long time ago, like a decade ago. And they just wouldn't look, or they wouldn't go do due diligence in order to get the guy. And so he was able to basically do this for decades. And billions lost. And not just billions for people who were high up and had a ton of money. You're talking about people who were barely, worked their entire life, put the money in Madoff's care, and Madoff would screw those people over, even friends of his wife. Like, this was even like family members. What are your thoughts on this? I mean, this went a long way in putting a knife in Wall Street, or this idea that Wall Street was a credible institution, not ensconced in fraud. But this had to take the cake. Is this a bad apple, or is the lot spoiled? Which one is it? I mean, Madoff was clearly one of the worst of the apples. At least I think so, anyway.
Well, so let's just be crystal clear here. We have a podcast called The New Untouchables, the Pecora Files, and Bernie Madoff did 50 billion over 20 years. Think about that, 50 billion. That sounds like a huge amount of money, right? Just remember, right in the same exact time frame when he's going through this in 2008, we've got the housing collapse. That housing collapse was a $29 trillion fraud. control fraud, elite control fraud, guys like Richard Bowen, who had 3/4 of their congressional testimony stricken from the record and were not released until 5 years after. Why? Because 5 years is the statute of limitations on fraud. So Bernie Madoff at 50 billion is awful. I mean, he is the fall guy. But when you think about the fact that we had a $29 trillion housing fraud that occurred right in the same time frame, and guys like Robert Rubin walked away scot-free, in fact, just went back to the revolving door and jumped right back in the thick of it. This guy, for as horrible as it is, and it's bad, let me make no mistake about it, $50 billion is a lot of cheddar. But 29 trillion makes this look like a pimple on a preteen's body.
Basically, what Bernie Madoff was doing is not abnormal. I think is your point.
It's the Wall Street business model is fraud, period. And it is backstopped by the government, the Federal Reserve. You have folks like Eric Holder, who literally contributed to the entire thing by putting these things in a snooze coffin just past the point of their statute of limitations. Dead serious. So this is not just Bernie Madoff is just one guy. There is an entire network of this going on, and they all protect each other, and they're all too big to jail. And you think about some of the folks that actually did go down, and it was only when it became so ridiculously in your face and being a Ponzi scheme, he just ran out of ability to milk other people to keep the scheme going. But when it came to all the other Wall Street fraud, this is a very, very minor thing comparatively. I mean, I know it's hard to get your mind wrapped around, but when you compare that against the $29 trillion
he caused a lot of damage. I mean, but I know your point. The point that you're making is, I get that this guy looks bad, but this guy is basically the norm. This is not like an abnormal process. Yes. The only reason they caught him was because they were going through the financial difficulty of the housing crash. But if it wasn't for the financial difficulties, he would have kept the Ponzi scheme going. I mean, from his testament, or from my understanding, he just ran out of people to get money from. The well dried up.
That's right. That's right. And you know, the interesting thing is as you said, Madoff's like, hey, I wrote the regulations.
Yeah.
You know what? There are so many of these guys. That's the entire point. You look back, I want you to think about this. This is a really challenging thing. There's maybe 2,000 auditors in the entire government. They barely funded this. And I think the funding for the entire auditing apparatus is less than 50. I think it's like 50 million. I mean, they got very, very low budget for chasing high dollar crime. Okay.
Well, they just released, I think it was a month ago, talking about how the IRS tends to go after the poor basically at the same rate as it goes after people with the uber incomes. It's because we've defunded these guys. Like, we haven't necessarily funded these guys with the money necessary and even the skill sets necessary to analyze cases like Madoff.
Nailed it. That's exactly. And so I want you to think about this. We know some people that have gone into Congress, you know, and they didn't have vast amounts of training on how the financial system works and how the laws work. They're public citizen. They ran for office. They're now making laws, and they have no idea how to do this stuff. So they are highly dependent on these consultants to write this legislation for them, to make recommendations. These huge lobby firms write this stuff, and they write it in such a way that it prevents them from being uncovered. In fact, going back into 95, I'm going to screw this up, but they had actually passed a bill that said you couldn't investigate certain things. There was like a gag order. And so what they did was they went ahead and started doing these prosecutions at the state level. And then Congress got wise to it in 98, and they went ahead and put the kibosh on being able to do discovery at the state level. And so there's so much of this that is baked in that they have literally blocked any kind of meaningful enforcement. So Bernie's like that white buffalo, man. He's like that, you know, that strange unicorn, that the white elephant in the room. He's not he was the fall guy kind of thing. You know what I mean? He basically he took it on the chin for every one of these fraudsters.
Well, let me ask you this. Did he take
it
it on the chin because he was going after them too? Meaning, like, he was willing to take their, like, he was cheating everybody across the board. Like, whether it was family members, whether friends of his wife, whether it was people who were in the industry, he was an equal opportunity, basically con artist.
Stone cold con artist. You got it, brother. No question about it. But that's the point, though, right? In terms of this whole mechanization, his was just kind of crude. He didn't advertise. He didn't go out and solicit things. He was just a glad hander in every party, and everybody literally rushed to give him their money. It was crazy. But again, because this is an easy, they got the whodunit, right? They already nailed it. They prosecuted him, et cetera. So Bernie can be kind of lifted up as kind of like the mascot for, hey, we took down Wall Street fraud. This has been going on since before the savings and loan crisis in the 80s. And it is baked into the entire model. I'm telling you, Bernie is just one tiny little blip on the fraud.
And he was
radar
unsophisticated.
screen.
That's part of the point that you're making, is that he was unsophisticated. Yes. He wasn't quite, even though he was officious about it, even though he was somewhat, a little bit prestigious and somewhat respected by people, he wasn't the most sophisticated of the actors here. And they used him as a legitimate scapegoat. I'm not saying that he is not guilty, but they used his crimes to act as if they had addressed the deeper problems, when in fact he was one of the lower hanging fruit they could have addressed. But here's we've only got a minute or two left on this side of the break before we come back. Isn't Wall Street, the way it's constructed, isn't Wall Street in general all a Ponzi scheme? And I'm not just saying that in the college stoner sense, although that might apply too, the sort of revelatory thing. But like, isn't it the case that if Wall Street, as it's currently put together, is not built on trading investments into genuinely productive companies, but is instead built on puffing up the assets, inflating the assets by selling them to people who are willing to buy them for more, by building up their asset value with government infusion after government infusion, and misplaced subsidies in some cases and unaddressed corruption in other cases. Isn't it all a Ponzi scheme? And again, I mean that seriously. Steve, what's your take?
First of all, it's very rare that Shane goes and breaks this stuff out that I say, dude, I am 100% in lockstep with you. But I'm going to tell you, I am 100% in lockstep with you. What you just said is better than what I would have said. It is exactly the case. What has happened is because they are no longer trading on the productive value of these companies. It's now a game. It's like these fungible digital things, right? It is not real. It's fraudulent. And what they've done is they've created an economy that is based on the financialization of financial actions, that it's no longer on the production of those companies. It really is just a game. And at some point in time, the bubble will burst. Well, but you nailed it. You said something more important than anything else. The government keeps backstopping it. That's why it keeps happening. So if the government didn't backstop these losses and keep doing socialism for the rich, we might see a drastic change in society and income inequality, you name it. But every time the government backstops it, boom. Go ahead, man. I'm sorry.
No, you're good. We got to close this one out, and this might be where you start to disagree with me. It seems to me that part of the reason we're doing that is not just self-dealing. It's not just that there are obvious and intense interests that businesses and corporations and Wall Street as an institution have in the United States government. It's not just corruption, not just rank corruption. It is also that the value of the U.S. dollar, and again, this is probably where you would disagree with me, the value of the U.S. dollar is in large part kept at its levels. It's kept as intact as it is by the integrity of those valuations on Wall Street. But we're out of time in this segment. You can push back on me in the next one. We're coming back to talk about another possible bubble. We're coming back to talk about cryptocurrency, as Coinbase, the cryptocurrency trading website company, has now been listed on the NASDAQ, the first crypto company to be listed on Wall Street that I know of. You're listening to Faultlines with Thomas and Stranahan. We will be back with Steve Grumbine, political, economic, and social justice activist, on the other side of this short break. Be right back.
Tough questions are the most powerful weapon we have. As long as you have questions, we'll keep asking. Radio Sputnik, telling the untold. By Any Means Necessary is your guide to the movement and efforts shaping the world around us, from mass incarceration.
No longer am I interested in or concerned with prison reform. I am interested only in the eradication of prisons.
To the battle between police and water protectors.
It was a pretty punishing disregard for the sanctity of human life, that unleashing water cannons on peaceful, prayerful water protectors.
From efforts to protect the environment.
The climate movement is ready to, with plenty of opposition research and force and strength, along with, the right of both science and morality, to fight them on this.
To the movement for Black Lives.
When I first saw the Michael Brown video, and I saw that it clearly contradicted the narrative put forth by the Ferguson Police Department and by police supporters in general, 3 words came to mind: color me shocked.
Stay tuned to By Any Means Necessary, 5 days a week here on Radio Sputnik. Faultlines.
And we're back. You're listening to Faultlines with Thomas and Stranahan, and we're talking with Steve Grumbine. Steve is a political, economic, and social justice activist and the founder of Real Progressives and Real Progress in Action. Those are a 501c3 and 501c4, respectively, dedicated to education and advocacy for modern monetary theory. You can follow Steve on Twitter, by the way, at SDGrumbine, also at Real Progress US on Twitter again. Now, one of the things we do on this show, one of the things that I think we like to pride ourselves on, is revealing context. We will frequently, and Jamarl specifically has led the way, and we provide the context for American news. One part of this, I think, is if you can teach people how to detect bias in the news, in language, in conversation. If you can understand, okay, what is this person bringing to this conversation that might indicate simultaneously what they're leaving off the table, you have a better understanding of the facts available to you, even if you don't know too much about the situation. Now, here's where I'm going with this. There is a term, a motive conjugation or Russell's conjugation. Basically, it has to do with how people will use different inflections, different qualities in terms of the words they use to describe things. It's named after Bertrand Russell. The classic example he gave is, I am firm, you are obstinate, he is a pig-headed fool. In other words, using different words depending on how you feel about somebody or how you want to portray somebody. And when it comes to Wall Street and it comes to the investments we make, there's a similar phenomenon that happens where if you don't like something, you'll call it a scam or a gamble. If you're mixed, call it something closer to speculation. And if you like it, you call it an investment. And this applies to pretty much anything that you're choosing to invest in or speculate in or gamble on, whatever the case may be. And this applies not just to Wall Street, but also to cryptocurrencies, to whether you're talking about Bitcoin or Ethereum or any of the other hundreds or thousands, literally, a bewildering number of cryptocurrencies available. What makes them a little bit more legitimate, of course, is when the government chooses to recognize them and when Wall Street chooses to recognize them. Now, this comes in the last day as Coinbase, the cryptocurrency trading company, has been listed on the NASDAQ, the first crypto company I'm aware of to be listed on the NASDAQ. And I want to turn to you here, Steve. You've given your takes on the show before, on cryptocurrency before. But briefly, if you could do a recap or if you could give them a new, what's your perspective on cryptocurrencies in general? And then we can get to this company specifically. Steve, what's your take?
As a commodity, it is a manufactured commodity. It is an envelope. Okay, it's a store of value. Like inside that envelope, you have US dollars. And if you're a networking guy and you understand data networking and you think about what a packet is, you have a header, a footer, you have the two ends of that encapsulate that packet. Inside that packet is some payload. And that payload in this case is the value, the US dollar. Okay. So what these Bitcoins and stuff do is they store money inside of them, if you will. And because they're a speculative commodity, they are really just a investment. They're like any stock, except a little bit more volatile. Obviously, I don't feel like they are a currency in any way, shape, or form, because a currency has a number of features that cryptocurrency, as it's misnomered, do not share. But I mean, I don't have an axe to grind with crypto per se. I just have an axe to grind with it being represented to be something it's not. So that's kind of my high level view there.
Wait, represented to be something it's not. What do you mean? Something that's has value as opposed to explain.
It's not going. Yeah, the fair value of Bitcoin is zero. I mean, it ultimately is just a digital representation in the in the ether. And ultimately, the value of this is the speculative nature of it. It's the scarcity of these bitcoins that drive the quote unquote price.
But how is that different than currency in general? And I don't mean to interrupt, but I'm just how is that different? Because, for example, a dollar, you can't eat your dollars, just like you can't eat a euro. How is that any different? Just one that you're holding on to. And just because you can hold on to it, does that inherently give it some level of value that a Bitcoin doesn't? And by the way, I don't like the Bitcoin thing either. So this is,
No. So I have a trophy sitting on my mantle, let's say. Okay. That trophy just sits there. All right. The US dollar is a tax credit. Okay. So they're two different things. The United States government is not going to give us a Green New Deal with Bitcoin. The United States government is not going to give us Medicare for all with Bitcoin. The United States government is not going to give us free college for all with Bitcoin. The United States government is not going, none of that stuff. This is a private thing. It is a commodity. It doesn't serve the value of actually, how many Bitcoin do you have? I don't know. I have $250 worth of Bitcoin. Why is it $250 worth of Bitcoin? Because Bitcoin in and of itself is not a currency. It's an envelope that holds dollars, so to speak.
No, and I get that. But isn't that same true of euros? How many euros did you have at your disposal? How many, I don't know, Egyptian dollars do you have? Or how much does Egyptian dollars worth? I mean, all of those things are relative in value to something else, right?
No, totally different. So the U.S. dollar, you don't say I have, 300 pounds of gold worth of dollars. I mean, that's not how it's done. The dollar is a unit of measure. Bitcoin is not a unit of measure. Bitcoin, it has no relationship to the unit of measure because the value that you would sell your Bitcoin at is really more a matter of what the speculative nature of it is. A dollar is a dollar. I'm not going to sit there and put a dollar out there on some dollar base instead of Coinbase and try to somehow or another watch the dollar go to 500 million. It's not an investment. It's not a commodity. It's a unit of measure.
I could see it becoming a currency. This might be the designation of cryptocurrencies, quote unquote, as cryptocurrencies as such might be sort of aspirational because theoretically at some point you could have a government, for instance, that chooses to take in crypto, that chooses to take in Bitcoin for paying taxes. If the IRS, and I don't see them doing this clearly, but if the IRS were to accept Bitcoin instead of American dollars, or if you had a new government or an old government that chose to redesignate its currency and chose to switch from its currency, whether it's the the Egyptian currency or the euro or the dollar, if they chose to switch to a crypto-based system, that would be a currency at that point, would it not, Steve?
So think about this. When I pay $1 in taxes, what happens to that dollar? It's deleted. It's destroyed. Okay. A dollar serves its purpose. It does its tour of duty, and the economy comes back and is destroyed. Okay. That right there, that temporary nature, it is literally an inch or a pound. It doesn't have what you're trying to say is not the same thing. And I think that the problem is that what makes a dollar different is, number one, it is the government's unit of account. Okay. So it would never take a Bitcoin because you can't delete a Bitcoin. That's not the purpose of taxation at the federal level. And so if you think about what I'm saying, they're not looking for revenue. The government doesn't need your revenue. They're trying to get rid of dollars from the economy as they spend new money into the economy. They're trying to delete old money out of the economy. A Bitcoin, they can't delete a Bitcoin. That's not the purpose of it. You see what I'm saying? There's a totally different reason. The government is not seeking your Bitcoin revenue. They're seeking to delete the dollars.
Even there, and I want to come back to Coinbase because, holding with your ideas here, the trading of Coinbase itself on the NASDAQ is sort of speculation built on speculation built on speculation. It's the turtles, a stack of turtles sitting on each other, in that model where cryptocurrency functionally and essentially is worthless. Maybe not functionally, but at its base, it has no inherent value. It's just electrical power on bits on a network of computers. The trading of those assets on Coinbase is another level of speculation. And then, of course, the trading of the value of Coinbase on the NASDAQ is another level of speculation. I was interested in the conversation we were having, but just briefly, how does that sort of description of the state of affairs sound to you? Does that sound right? How else would you put it?
Yeah, no. So Coinbase is a company and they do a service, and that service is just like any other service. And now that company is on, the stock markets, and, it's now going to be publicly traded. An investor walked in the door named Kathy Wood, dropped almost $250 million yesterday. And, this adds legitimacy to that investment. Okay. It's a investment that it's not a coin, right? It's a platform. It's like I said, it's any other business. So, but the thing is, this is what's interesting about this. You're right, being the first thing, but what it is, interestingly enough, is adding a layer of credibility. Anything that is a corollary or an adjacent type thing to Bitcoin and other crypto, by investing in that, it legitimizes the overall platform for what it's doing. But again, the only concern I have with the way we talk about this is that dollars are different than Bitcoin. They serve a functionally different purpose, and I think that's really my largest difference here, is to understand what the two do, why one, what the other one does, and not trying to make them like an equal thing. They're not the same thing. They don't serve the same. It's really my key point here.
Yeah, dollar. I understand the key point. I do get your point, and so I don't want to make it as if I'm blowing past that. Dollars are U.S. currency. We're sovereign currency, and that's the thing that we use in order to negotiate payments and everything else. When we are trying to pull money out of the economy because the economy is running too hot, let's say inflation, the government can tax in order to get rid of some of the dollars out of the community, meaning it can destroy those dollars as well as create those dollars. And it serves, depending upon whether it's destroying or creating, it's because of something that's taking place in our society that the government needs to accomplish. Totally get it. Totally get it. But let's say a government, let's say Venezuela, and they wanted to get around, let's say, some of the sanctions that were being put forth. And they come out and say, you know what, from here on out, we're going to start using a digital currency. And that digital currency, I don't know, Bitcoin. Yeah, we're going to call it Bitcoin with a V. And in the process of creating that Bitcoin, they use digital currency, just like something like a Bitcoin. And they can destroy it when they need to destroy it. They can create it when they need to create it. I guess the thing that we're getting at, or I guess what I'm trying to get at, I don't want to put words in Shane's mouth, is that value is contrived in all of these currencies. And even though the point of it may be to do one thing or the other, at the end of the day, it's still contrived. That dollar has no value. That euro has no value that's inherent to it. In fact, it doesn't even really exist. It's a piece of paper in real terms that somebody call a euro or a dollar. And if anything goes wrong where the government no longer exists, then that euro no longer exists. How is that different than, let's say, something like a Venezuela or something like that accepting a digital currency as their main currency?
I'm so glad you said that, because I can be the United States, I can be Venezuela, I can be China, I can be anyone. And China's doing this, by the way, right now. Okay. I can be any country I want, and I can choose to make my coins a piece of paper. I can choose to make them a metal coin. I can choose to make them a crypto-based currency that the government itself creates and controls and accepts as tax payment. Okay. That's a totally different thing than a private exchange market that is not government owned, that cannot satisfy a tax liability. And because of that, there's no, the reason why you will accept the dollar is because at the end of the day, you have to pay your taxes in dollars. Doesn't matter how many Bitcoin you have. At the end of the day, if they look at your portfolio and they see you've increased, they're going to charge you not how many Bitcoin, they're going to charge you US dollars for the interest that you earned on that Bitcoin investment. So I'm just trying to put it in perspective here. Venezuela, I fully expect us to largely go to digital currencies around the world. Why is that? Because you can put things like timers in there to prevent wealth hoarding. So in other words, if you don't use this thing in so much time, I can prevent you from pooling currency by having that thing time out. I mean, we could do a million different things. Okay, so the government can create law, and that's the thing. currency is law. All the laws that surround our dollar versus, the wild, wild west of Bitcoin, that is what literally makes up the patent, if you will, on that unit of account. And so if Venezuela decided to make their currency in the form of some sort of digital currency, there's absolutely nothing stopping them from doing that. And there's nothing wrong with it. In fact, I really foresee that happening. I see government-based digital currencies becoming the way of the future.
And I at the risk of being too wonkish or getting too deep into it, I want to come back here. We're pushing over slightly, but we're still going to be taking calls in a few minutes. 202-521-1320. But here's where I'm going with this: the argument that a government functionally creates money. That's sort of, it's a modern monetary theory, but it comes from chartalism. Older idea, definitely. The idea that the government creates money and then dissolves it out of existence upon taxation effectively, and that there is this cycle that has as its beginning and its end the government's creation of that money as debt, specifically with that money being cancelable. That seems like a mainstay of modern economics, but it does, and the vast majority of economic history, as far as I can tell from what I know, but it doesn't seem inevitable. And if there were again, this is, too many ifs doesn't do you much good, but I can see there being a large transition. We've had conversations with another economist on our show, Mark Frost, who's talked about he is opposed to the fractional reserve banking system and opposed to the sort of debt-oriented basis upon which our money is printed. If there were a transition to a non-debt-oriented monetary system in a country or a group of countries or around the world, in other words, if money, instead of creating money as debt and then dissolving it upon taxation, if money continuously circulated, continued to be in existence, it seems to me like cryptocurrencies would work for that. And if that government simultaneously chose to take them in, if you saw that transition, I guess you're probably going to push back here, but I'm curious on which part of that do you disagree with? How would that not work for you? Or do you just see it as unlikely? Steve, what's your take?
Well, first thing is that, with all due respect, there is no such thing as a fractional reserve system. That's number one. That's the Bank of England put out a great paper. It's in one of their quarterly reports or whatever. They basically tell exactly the fact that banks don't lend reserves. There is no reserve. The reserves never leave the banking system. Banks don't lend deposits. Banks create deposits when they make loans. So that whole mindset, it's like if you start with the wrong foundation, you just go completely screwy from there because you built the house of cards on sand. So that's number one. Number two, the idea of debt is really kind of silly because the idea is anything, you need to have some form of an obligation, regardless of how it works, to keep that currency, to keep flowing, to make it matter. And ultimately, if you go back pre-Federal Reserve, you had a million different Billy Bucks, Joey Bucks, Susie Bucks, man bucks, girl bucks, whatever bucks. And what was happening was there was a lot of fraud, a lot of nonsense. You almost had like a foreign exchange in the United States, okay, with all the different bank bucks. And so when they did bring it under the US dollar, when they made that kind of the thing, it stabilized the payment system. Well, there's no stability in the payment system with this. First of all, it's valued in dollars or rubles or yuan or remnant, whatever, right? It is not valued in Bitcoin. It's valued in dollars. So it sounds crazy, I know, but there's things right there that he just said. First of all, I don't believe in the whole debt-free money thing. That's an AMI kind of nonsense thing that I do not support in any way, shape, or form.
Basically, you're saying debt is money regardless. Like in all situations, money is debt.
It really is. It really is. It's just a IOU. It says, hey, I will accept this for that. That's all it's saying. It's not necessarily like you're in debt. It's probably the wrong word to use for it. Unfortunately.
Also, I want to nail something that you said just to make the difference so the audience knows what we're talking about between what you said and Shane said, because the disagreement might be a little bit high level. Fractional reserve currency. Basically, the point that I think Shane is making, and the point that you're making, just to mind the gap, is that there is a certain amount of money that banks have to keep on hand when they're loaning out money. But that's not money that they're loaning out. They're basically creating that money, even though they're creating a tether to the amount on hand. And I think that's supposed to be, 9 times as much. So if a bank gets $1,000, they can loan out 10,000 or loan out 9,000, something to that effect, because they have to keep the 1,000 on hand. That's what you're talking about. You're making the point that they're creating that money. That's not money that they're loaning out per se. That's money that they're basically creating.
Absolutely.
Okay.
I think that's the arguments of the people who don't like the fractional reserve system. In fact, I think that is their exact criticism of it. And we're pushing over time here, and we've got calls on the line, so I don't want to be. We should come back on this at some point because it's a good conversation, and I feel like a lot of people actually do think about and care about this stuff. And it's not too in the weeds, but you know what? We're out of time here. Steve, thank you for joining us. Good conversations.
You got it, man. Guys, thank you so much for having me.
Great talk. All right. Steve Grumbine is a political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action. Those are a 501c3 and 501c4, respectively, dedicated to education and advocacy for modern monetary theory. And you can follow Steve on Twitter at SDGrumbine and at Real Progress US, also on Twitter. You're listening to Fault Lines with Thomas and Stranahan. We're back taking your calls on the other side of the short break, 202-521-1320. Be right back.